Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve, and here are some of the trends we're going to be diving into. The House considers the GOP's mega bill after approval from the Senate, and markets react in a lukewarm fashion. Stocks ended the day mixed. The tech sector taking a hit today and dragging the NASDAQ down into negative territory. And speaking of technology, Apple taking a bite out of AI ideas from other companies. It's contemplating incorporating other large language models into its own technology. It remains to be seen how that will potentially impact consumers and investors. Apple weighing its options in the AI space, the company considering help from Anthropic or OpenAI to power a new version of Siri. For more, we're bringing in now Lance Ulanoff, editor-at-large of Tech Radar. Lance, my friend, it is always good to see you. So Bloomberg reports, Lance, you saw this, Apple thinking about OpenAI or Anthropic to power a new version of Siri, so not relying on its own in-house models. You saw that headline, Lance, you saw the report. What'd you make of it?
Well, I mean, look, everyone knows that Apple's behind. Apple's admitted it. Apple, basically was trying to do too much at once. I mean, when we spoke to them after WWDC, they were talking about working on sort of V1 and V2 simultaneously. And it just wasn't up to Apple's standards. So they couldn't release the Siri, the amazing Siri that was going to understand you and understand your interface and talk to you more naturally. They just weren't ready to do it. And now, obviously, we know that they've admitted they're pushing it out into next year. But Apple has never really talked about pushing aside its own models, at least not publicly. They're still trying to work on their models. They'd like to do as much locally. They'd like to do as much on their private cloud compute, which protects the privacy of their consumers. And this idea that they simply can't get their models to where they need to be, and they're turning to the true experts, which is Anthropic and OpenAI, among others who are out there doing this, to maybe replace their own. I'm not sure I believe it yet. I think that what I do believe about this report is that conversations are happening. And look, conversations could be happening just so Apple can learn more, that they want to understand how are people doing this so we can do better. And if they find that we simply can't do better, then maybe they will spend those many billions of dollars to gain access to these models.
Lance, the folks over at CFRA, those analysts, now they're fans of Apple, they got to buy. Here was their response to this report, Ants. They said this is a good sign. It provides a hedge against Apple internal initiatives. And then they said, Lance, although Apple has clearly fallen behind the AI race to others, we still expect the company to get it right over the next 12 months and believe it is uniquely and best positioned as a distributor of AI to the consumer. So that is the optimistic take. Do you share that optimism, Lance?
Well, they are in a good position. I mean, you think about the billions of iPhones out there, right? You think about everybody that is using their services, right? The touch points that Apple has with the population. So that's their unique position, right? If they can flip the switch on so that people are truly engaging with the AI that they're going to build. The problem is Apple doesn't seem to have the core expertise for the competition. It has struggled. And, I said to Apple about a month ago, I said, you guys play it very safe because of your commitment to privacy and security and not sort of making the big mistake. Whereas the competition in the AI space, they run a little fast and loose and they mop it up later on. That's not how Apple works. So there is a tension here between what you're talking about, the Apple's core, ability to reach so many people and Apple's need to have that privacy and that control. And I don't know exactly how Apple solves it. This would be a very big deal because if they pull in a third party, there is a risk factor, right? When you pull in a Claude, an Anthropic or OpenAI, and you say, now that model lives on our servers, you really have to say, how is that model trained? Because now the liability is on us.
If they don't have that new version of Siri, though, Lance, what would that mean for the iPhone upgrade cycle? Because, in just a few months, come September, you would expect Tim Cook to take the stage and introduce the new iPhone lineup.
Yeah, that 100%. I'm sure that's going to happen. Everyone expects an iPhone 17 line, and they since they kind of have down pat the story on what's happening with their AI, they don't have to say that much about it. I don't think they'll oversell it, but yeah, it's becoming a problem because AI is moving markets, right? AI is the most important, the most transformative technology we have seen in a generation. That's not going anywhere. Apple needs to be at the forefront of it. It has to show something. I think it is going to be difficult in the fall because they won't be able to pair the new iPhone with their latest AI because it simply won't be ready unless they do something major in the interim. But even if they do, to get it baked into those new pieces of hardware would be very difficult.
Final question, Lance. How do you think Apple finds itself in this position where these reportedly they may have to look to Sam Altman's OpenAI or Anthropic?
Well, look, Apple said it to me, that they want things to be at the Apple level, right? That unless it meets their requirements for performance, they're not going to put it out there. And so that's how they end up in that position because they keep looking at what they're doing. And if they're not satisfied, they have to find a way to be satisfied. And they know that this is very unlike Vision Pro, where they kind of threw something out there and said, hey, maybe the consumers will love this. We're leading away. This is them chasing after a market that is getting out of control, that they know that consumers are deeply, they've embraced it. It is moving fast. The competition is moving much more quickly. They must do something, which probably means Apple has to change its approach.
Lance, always great to have you on the show. Thank you, sir.
It was a pleasure.
U.S. stocks closing mixed as President Trump's tax bill passes in the Senate. Here with the trading day takeaways, Yahoo Finance's Alec Canal. Alec.
Yeah, a lot happened today, and I'm going to get to that Senate bill in just a minute. But let's start about what we saw earlier with the positive labor market data. We saw job openings and labor turnover, that survey coming in better than expected. We saw job openings reaching their highest level since November 2024. The quits rate, which is a sign of confidence among workers, also edged slightly higher. We did see hiring slip in the month, so decade low hiring, decade low quit rate, but economists, they're not really too concerned about that because we haven't seen a ton of layoffs. Corporations, we've learned from past downturns, past recessions, that it's really hard to hire those workers back. So as long as we continue to see, steady hiring, but also no layoffs, that's going to be key for this job market. And it does set us up for that critical non-farm payroll report, which we will be getting on Thursday due to the July 4th holiday. Bloomberg estimates say we will see 110,000 jobs added, and the unemployment rate to tick slightly higher to 4.3% there. So that sets us up pretty well heading into the summer months. And then if we look at the big, beautiful bill, we did see some reaction there in stocks. It seems like it was largely priced in. No huge surprises there, but you are taking a look at some tech names. We saw NVIDIA down 3%, Meta down about 2.5% today. Obviously, Tesla, the biggie, down 5%. This has to do with a lot of those EV credits getting removed from this bill. And what the Senate also did is they struck down a ban which would eliminate state-level AI regulation. So this was a big disappointment on the part of some of these tech companies. But solar stocks did see a bit of a bid here. And if you take a look at something like a Sunrun, for example, we are up about 11% at this point. So that comes as they removed an excise tax, which would make a lot of these projects more expensive. So it just goes to show how different pockets, different sectors of this market can react pretty swiftly to a lot of these policy changes.
Yeah, it was interesting to see the reaction of the markets. To your point, Ali, we had an analyst on the show today who kind of said, listen, this was priced in their opinion. The bond market was interesting because obviously a lot of worries about debts and deficits. Elon Musk is furious about that. He's on X. But it was a shrug initially. I mean, the 10-year 4.24 was where I last checked. Now, we'll see what happens. I mean, do we see a pushback from the bond market? We'll find out.
Bond market has been pretty boring. And about a month ago, I was doing so much reporting on bonds because we just saw yields surging to the upside, but not really anymore. We've seen this muted reaction here when it comes to the bond market, when it comes to some of those longer term yields, the 10-year and the 30-year in particular. But experts have told me that if we continue continue to see any significant move higher in yield, you're looking at the 10-year note about 4.25. That could be the biggest risk to this rally. And it's not necessarily the level, it's more so the rate of change. So we just don't want to see a quick escalation, a quick sell-off of bonds. So that's a great point, Josh, and it's something that I'm continuing to watch closely as well. And then finally, are we in a frothy market? So this was interesting. This caught my eye from Goldman Sachs, and it's these returns that we're seeing across riskier corners of the market. So we see this Bitcoin sensitive index from Goldman Sachs, obviously the big outperformer here. Bitcoin has just crushed it, up about 15% year to date. You're seeing high beta, non-profitable tech. I mean, this has the workings of a retail trader all over it. And we've seen since the April bottoms that those younger traders, those that were born out of the pandemic, they've been the ones driving this rally higher. They have been aggressively buying the dip. There's been a lot of FOMO chasing, momentum chasing. We've seen stocks like Palantir, Supermicrocomputer as the best performers so far this year. So that can lead to some concerns if there's just a bit of frothiness in this market when you're leaning on these unprofitable tech names. And we've been hearing that you really want to focus on those high quality stocks.
All right, thank you, Allie. Appreciate it. Stick around, much more Ask for a Trend. That's still to come. With Independence Day right around the corner, Americans are gearing up for another long summer weekend, and with that comes busy travel days. Haley Berg, Hopper, lead economist, with me now. What are some of the expectations for this weekend, Haley? You think it's going to be busier than last year?
It will be busier than last year. Just on flights alone, we're expecting to see 2.4% more seats departing on about 4% more flights over the long weekend. In total, right now, about 21 million seats are expected to depart between Wednesday and Monday of next week. And that is more than what we've seen in the last 5 years of Independence Days.
And where are folks headed, Haley? What are the popular destinations this year?
Big cities in the U.S. and abroad are super popular for Independence Day weekend. Right now, we're seeing New York City, Seattle, and Miami are very popular this year. But those who are starting an international trip are hitting some of those further flung destinations like London, Paris, and even Tokyo by starting a trip before the holiday and maybe making a week of it.
And what will it cost folks? What are you seeing, Haley, in terms of airfare trends?
Great news. For domestic travelers, prices are right around $260 for 4th of July this year, down 3%. And for those going abroad, prices are down about 13%, both to Europe and to Asia, which is hundreds in savings for those travelers who are being smart about when they book and how much they're paying for their tickets.
What about if I'm looking to go overseas, Haley? What do airfares look like there? Same good news?
Same good news. Airfare to Europe for 4th of July and most of the summer, around $840 per ticket. That's down 13% year over year. Asia, similar story. Airfare is around $1,300 per ticket, also down 13%. But Asia in particular, it's down from summer highs that were closer to $2,000 per ticket that we've seen in the past 3 or 4 years.
So I have my destination picked, Haley. I booked the flight, I land. When I do land, now what am I looking at in terms of hotel rates? How much can I pay for that rental car?
Hotel rates in the U.S. right around $213 per night. That is lower than the summer average. So 4th of July weekend, we are seeing a little bit of price relief, probably because it's a big weekend. Vacation rentals a little bit more expensive, about $230 per bedroom per night. But for families who are traveling with a big group, maybe a pet, it can be a great option. You get a little bit more space for that $230 a night. And then our rental car prices are pretty high over 4th of July. It's a big driving holiday. Per day, the national average about $58, and that's up $10 from what you would pay any other weekend of the summer.
All right, finally, Haley, travel tips and tricks. What can you give us?
Be flexible when you're booking, if possible. Try to travel midweek, Monday, Tuesday, Wednesday, both domestically and internationally. That's when you're going to see some of the really lowest prices. If you can, book a last minute trip in a big city. We often see lower prices in a New York, a Dallas, a Los Angeles over a long weekend like this. And if you haven't booked yet, consider adding a rebooking service like disruption assistance from Hopper when you do book. If you're canceled, delayed significantly, miss a connection, especially on a short weekend like this, you will be able to rebook on the next available flight regardless of the airline or get a refund for your ticket. So it's a good way to protect your interests, especially over a busy holiday weekend where domino effect delays can really impact your travel plans.
All right, Haley, thanks you so much for your time today. Appreciate it, especially those tips and tricks.
Great being with you.
Time now for what to watch Wednesday, July 2nd. Going to start off on Tesla. The electric vehicle makers reporting delivery numbers for the second quarter on Wednesday. Analysts forecasting Tesla to report global deliveries of about 390,000 in the quarter. While that would be significantly higher than first quarter deliveries, it is still an 11% decline year over year. Company facing tougher competition around the world, we know, and the stock has been pressured by other factors, including CEO Elon Musk's political battles with President Trump. But analysts say there is a bright spot: full self-driving and the robotaxi business on the heels of the launch last month. Benchmark raising its price target on the stock to $475. And turning to a look at the labor market, ADP employment data for June, that's coming out on Wednesday. Economists expecting private payrolls to increase by 95,000, which would be up from May, which saw the lowest hiring, remember, in more than 2 years. And the report comes just a day ahead of that June jobs report, which is out early due to the July 4th holiday. The expectation, 110,000 jobs added to the economy, and the unemployment rate to tick higher to 4.3%. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your world. Have a great night.